One morning, while most traders sat frozen in front of a sea of red candles, their hearts pounding with fear, a man named Kane quietly closed his laptop. On his prop firm dashboard, a number flashed across the screen: $2.3 million payout. This wasn't a dream, this wasn't fiction. It was the largest single payout in the history of proprietary trading. But what's even more shocking is this. Just a month earlier, Kane's account balance was only $130,000. How did he turn that into over $1 million in just 4 weeks? The answer isn't luck. It isn't a wild all-in gamble. It's a philosophy so deceptively simple, most traders overlook it. What Kane calls base hits, small, consistent wins repeated day after day. We've been taught to chase home runs, the one big trade that will change everything. But Kane built an empire in the markets by doing the opposite. He survived the collapse of FTX, where he lost 78% of his net worth. He rose from that wreckage, mastered futures trading, and created a strategy that doesn't fight the market but flows with it, targeting 50% of the range, taking the move, and getting out before the war continues. This is more than a trading system. It's a story about discipline, patience, and the art of conquering fear. Welcome to Trading Psychology Stick, where we explore the minds of traders who turned failure into fortune. Nothing here is financial advice, just real stories and hard-earned wisdom from the trenches of the market. Today, you'll walk with Kane through 12 powerful chapters, from devastating loss to record-breaking payouts, from his proprietary edge to monk-like discipline, from surviving drawdowns to building a trading dojo. And I promise you this, by the end, you will never look at trading the same way again. You'll realize the market was never the enemy. The only battlefield that matters is inside you. Part 1. The Fall. Chapter 1. The Record Holder. What would you do if one morning you opened your account and saw a payout of $2.3 million? Most people imagine champagne, luxury cars, or maybe an early retirement. But when Kane received the largest prop firm payout in history, his reaction was startlingly different. He didn't celebrate. He didn't post screenshots on social media. He simply closed the screen, took a deep breath, and prepared for the next trading day. To him, it wasn't the jackpot. It was just another step in the process. Kane didn't come from Wall Street. He wasn't groomed in hedge funds or investment banks. Before trading, he worked in tech sales, just another man in a cubicle wearing a tie, chasing monthly quotas. But what set him apart wasn't where he came from. It was the quiet fire inside him, the refusal to accept a life where his potential was capped by a paycheck. And yet, the road from office worker to record-breaking trader wasn't paved with luck. It was paved with losses, self-doubt, and the kind of discipline most people never experience in their entire lives. Imagine this. You're sitting at your desk, screens glowing in the dark, futures charts rolling in real time. You know that at any moment, one click could mean thousands gained or lost. Most traders feel their pulse race, their breath quicken. Kane, he sits still, almost monk-like, waiting. That's his edge, not an indicator, not a secret algorithm, but the ability to sit in silence while others chase chaos. That ability to do nothing until the setup is perfect made him the founder of the Lab, a trading community built not on signals or hype, but on discipline and patience. And that discipline gave birth to results no one could ignore. From $130,000 to $1.4 million in a month. From ordinary trader to prop firm legend, with over $3.5 million in payouts across multiple firms. Yet ask him about it, and he'll brush it off as if it's nothing. Because to Kane, success isn't defined by the money you withdraw. It's defined by the consistency you can repeat. Here's something fascinating. When Kane talks about his biggest wins, he often mentions his biggest losses in the same breath. Like the time he held a winning position too long, watching $50,000 in profits evaporate because he got greedy. That pain taught him more than any win ever could. Now he has a rule: take the meat of the move and leave. Let someone else fight for the scraps. What Kane teaches us here is a paradox. The more you obsess over money, the less you make. The more you obsess over the process, the more money finds its way to you. This is the hidden truth that separates gamblers from traders. When you chase the payout, you gamble. When you chase the process, you trade. But Kane wasn't always this calm, collected master of patience. In fact, before his rise came a spectacular fall. A collapse so devastating, it would have ended most trading careers. It happened in the wildest market of them all, crypto. Chapter 2. Crypto Collapse. 78%. That was the number Kane saw disappear from his net worth during the FTX collapse. Imagine logging into your account and watching nearly 4 out of every $5 vanish. Not over years, not even over months, but in a brutal cascade of days. At first, Kane thought he was untouchable. He had made big wins with XRP on Coinbase, turning small bets into windfalls. Like many traders in the crypto boom, he felt invincible, until the very thing he believed would make him rich became the knife that cut him down. Here's the trap. Early success can be the deadliest poison. Jesse Livermore, the legendary trader immortalized in reminiscences of a stock operator, once said, "It's not the market that beats you, it's your own complacency." Kane lived that truth. He wasn't beaten by Bitcoin, he wasn't tricked by charts. He was undone by his own sense of certainty, the quiet arrogance that whispers, "You've cracked the code, you can't lose." And when FTX imploded, taking billions of customer funds and reputations with it, Kane's portfolio crumbled right alongside. Picture the scene. It's late at night. The glow of the screen paints the room in cold blue light. Red candles cascade down the chart, each one another slice into his capital. His heart sinks, his palms sweat, but he doesn't exit. Why? Because he believes, like so many others, that the market has to come back. And then FTX collapses. Withdrawals are frozen, 78% gone. The silence in that room is louder than any alarm bell. But here's where most people stop. They lose, they quit, they curse the market and walk away. Kane did the opposite. He didn't blame crypto. He didn't blame Sam Bankman-Fried. He blamed himself. And in that moment, he realized something life-changing. Complacency is the most dangerous position you can hold. Quick question for you. When was the last time you took full responsibility for a loss instead of blaming the market, the news, or bad luck? Think about that for a moment. If you're honest, really honest, how often do you own your mistakes versus making excuses? Comment below with one word. Ownership, if you're ready to stop blaming and start learning. That collapse became his initiation, the burn that forged his discipline, the experience that forced him to abandon the illusion of easy money and search for a market with rules, structure, and predictability. Kane often jokes that crypto taught him how to lose, but futures taught him how to survive. The difference? In crypto, he was always trading, always watching, always exhausted. In futures, he could step away, reset, and return fresh. That psychological edge, the ability to rest and recover, became as important as any technical skill. From the ashes of his crypto collapse, Kane built something stronger, a strategy grounded in patience, in structure, in consistency. And that strategy would take him from devastation to domination. But first, he had to find the right battlefield. Chapter 3. Futures Pivot. Why would a man who lost nearly everything in crypto decide to walk away from the digital gold rush? Why leave the thrill of 24/7 markets, the promise of overnight riches? The answer is simple: survival. Kane realized he didn't just need another chance to make money. He needed a battlefield where discipline could win, and that battlefield was futures. Unlike crypto, which never sleeps and drags traders into exhaustion, futures markets operate on structure. They open, they close, they breathe with the rhythm of sessions. London, New York, Asia. That rhythm gave Kane what crypto never could: boundaries. The boundaries gave him rest, and rest gave him clarity. He often describes the difference like this: crypto was a casino without clocks, pumping oxygen into the room to keep you playing until you collapsed. Futures was a chess match. Each move measured, each session a round, each setup an opportunity, not an endless stream of noise, but a carefully timed play. Imagine this scene. It's 9:15 a.m., New York time. The S&P and NASDAQ futures start to hum with volume. Kane is at his desk, but instead of frantically scanning charts like he once did in crypto, he is still, calm, waiting. Because he knows what's coming. The 9:30, open, liquidity injection, volatility spike. It's not about chasing the first candle. It's about anticipating the manipulation that will follow. In crypto, the chaos was constant. In futures, the chaos has a schedule. Trading crypto had nearly broken him, not because of volatility, but because of burnout. the endless screen time, the fear of missing out at 3 a.m., the sickening realization that even when he wasn't trading, he was still chained to his phone, checking prices in bed, in restaurants, at family gatherings. Futures set him free. It gave him the ability to shut down at the end of a session, to recover mental capital, to return sharper the next day. Here's a moment of honesty from Kane himself. He once calculated that during his crypto days, he was making less than minimum wage per hour when he factored in all the screen time. Millions of dollars in volume, but pennies per hour of actual life invested. That realization hit him harder than any loss. Time, not money, was his most valuable asset. And here's the wisdom bomb. Your choice of market is not just about opportunity, it's about alignment. If the market you trade forces you into self-destruction, then it doesn't matter how good your strategy is, you will lose. Kane chose futures not because it was easier, but because it was a market where his discipline could finally thrive. Let me share something personal here. I once knew a trader who made $500,000 in crypto, then lost it all because he couldn't stop watching charts. His wife found him at 4 a.m. I passed out at his desk, phone still in hand. That was his wake-up call. Like Kane, he switched to futures, not for the money, but for his sanity. Sometimes the best trade is knowing when to walk away from a market that's killing you slowly. Kane's pivot to futures was the turning point. From there, he would build a strategy so deceptively simple, yet so powerful, that it turned him into a record-breaking trader. A strategy that would become his signature edge. Part 2. The Method. Chapter 4. The Edge. The market leaves footprints. That's what Kane believes. Not predictions, not promises, but recurring patterns that whisper where liquidity hides. And if you learn to listen, those whispers become your edge. For Kane, that edge lives in 3 interconnected concepts: SMT divergence, the power of 3, and psychological price levels. Let's start with the power of 3. Every day, every session, every chart, Kane looks for the same story playing out again and again. Accumulation, manipulation, distribution. Think of it like a 3-act play. First, the market gathers its strength quietly. That's accumulation. Then comes the deceptive move, the sudden thrust that traps the impatient. That's manipulation. And finally, the real journey begins. As the market delivers in the true direction, that's distribution. The power of 3 is not about predicting the future. It's about recognizing the script the market has used for centuries and positioning yourself where probability tilts in your favor. Now add SMT divergence to the mix. SMT smart money technique compares correlated markets. For Kane, it's usually NASDAQ and the S&P 500. When one market breaks a high while the other lags behind, that divergence is the market's tell, like a poker player's unconscious twitch. It reveals hidden weakness or strength. Imagine NQ sweeping above a morning high at 10 a.m., while ES refuses to follow. To the untrained eye, it looks like momentum. To Kane, it's manipulation. He knows liquidity has been taken, and that's when he strikes. But here's the third piece of the puzzle: psychological price levels. Why does the market seem to gravitate towards certain numbers, as if drawn by invisible magnets? Why do prices stall at round levels like 15,000 on the NASDAQ, or bounce from the 50% midpoint of a range? Because numbers are not just digits on a screen. They are anchors in the minds of traders. Round numbers feel safe, important, decisive. Institutions know this. They hunt stops at these levels like predators at a watering hole. Picture the complete setup. It's 9:58 a.m. The room is quiet. NQ approaches 15,000, a major psychological level. It surges through, taking out the round number. Retail traders pile in, thinking the breakout has arrived. But Kane's eyes are on ES. It doesn't move. It sits still, refusing to confirm. SMT divergence. Then he sees the wick form above 15,000, a liquidity sweep at a psychological level. The power of 3 manipulation phase is complete. At 10:01, NQ snaps back below 15,000. Kane clicks. He's short. He doesn't aim for the entire collapse. He only wants the walk back to equilibrium, the 50% of the range. And when price delivers, he's done. Another calculated win. Here's the deeper truth. Kane isn't trying to conquer the market. He's not swinging for home runs. He's not fighting trends. He's waiting for the manipulation at key levels, the sweep that clears liquidity, and then riding the snapback. This is the opposite of what most traders do. While they chase breakouts, Kane fades them. While they hope for miracles, Kane takes what the market offers. And those disciplined moves, repeated day after day, built millions. If you've ever been caught in a false breakout at a round number, watching price reverse immediately after you entered, you've experienced exactly what Kane exploits. The difference is, he's on the other side of that trade. Take a moment and think. Which round numbers have burned you before? Was it 4,000 on the S&P? 100 on crude oil? Share in the comments which psychological level has been your nemesis. Awareness is the first step to mastery. Mark Douglas said, "The market is never uncertain. It simply offers probabilities." That's the essence of Kane's edge. SMT divergence plus power of 3 plus psychological levels doesn't guarantee wins, but it stacks probabilities so high that consistency becomes inevitable. This is Kane's secret. Listen for the whispers of manipulation at key levels and strike when others are blind. But having an edge means nothing without proper risk management. Even the sharpest sword is useless if you don't know how to wield it without cutting yourself. Chapter 5. Position Sizing Mastery. If discipline is the soul of trading, then position sizing is its skeleton, the structure that holds everything together. Without it, even the sharpest strategy collapses. Kane knows this better than anyone. His edge is not just SMT divergences or PO3 setups. His real power lies in how he sizes his trades, how he manages risk so meticulously that even when wrong, he lives to fight another day. Most traders think in terms of wins. How much can I make if this works? Kane thinks in terms of survival. How much can I afford to lose if this fails? That simple shift changes everything. He uses a fixed fractional approach, never gambling his whole stack, never over-leveraging because of emotion. On base trades, he risks a small fraction, enough to keep his capital safe. When multiple edges align, daily bias, H4 confirmation, SMT divergence at a psychological level, he scales, layering entries like a surgeon, making precise incisions. Picture it, a Monday morning, futures spike after open. Kane sees partial confirmation, so he takes a starter position at 20% of his usual risk. Price begins to align with his model, divergence strengthens, so he adds another 10%. It breaks further in his direction, the psychological level is swept, he adds the final 20%. Now the trade is stacked, but each layer only built on strength. If the market had turned against him at the first sign, he would have walked with minimal damage. That's his philosophy. Protect capital first. Press only when conditions are perfect. But here's what separates Kane from amateur traders. He never, ever averages down into a loser. Adding to a losing position is like pouring water into a sinking ship. It might keep you afloat for a moment, but eventually you drown. Kane only adds when the market confirms his thesis, when price action agrees with his analysis. This isn't stubbornness, it's survival. Here's a practical exercise Kane uses with his students. Calculate your maximum risk per trade, then cut it in half. Trade with that half size for a month. What you'll discover is shocking. Your wins might be smaller, but your losses hurt less. Your emotions stay calmer, and paradoxically, your consistency improves. Most traders are overtrading their account size, suffocating under the weight of their own positions. Kane learned this lesson the hard way. Early in his career, he took a sure-thing trade on crude oil with 5 times his normal size. The logic was perfect. The setup was textbook. But the market didn't care about his logic. News hit, oil spiked against him, and in 3 minutes he lost what took 3 months to build. That day he made a vow. Never again would position size be dictated by confidence, only by math. Here's the wisdom bomb. Risk is not about math alone, it's about psychology. If your position is too big, your brain sabotages you. Fear tightens your chest. Greed whispers louder. Patience evaporates. But when your size fits your risk plan, you can breathe. You can think. You can act like a trader instead of a gambler. Kane's genius is not just in technical skill, but in how he protects his mental capital by never letting a trade become emotionally overwhelming. Alexander Elder wrote, "Risk management is the art of surviving 1,000 cuts." Kane embodies this. His millions didn't come from a few lucky home runs, but from countless small wins, small scratches, and controlled risks that let him stay in the game long enough to catch the rare big wave. Speaking of big waves, risk management is what prepared Kane for his most famous trade. The setup that would make history. The $1 million move that proved his process worked. Every trader dreams of it. The one set up so clean, so undeniable, that pressing the button feels less like gambling and more like destiny. For Kane, that moment came in December. He had already built momentum with consistent wins, stacking small victories, preserving his capital. But then the market presented him with something rare, a perfect storm of confluences. Picture the morning. Kane wakes up, checks the daily bias, bearish. H4 structure, confirmed. He marks the key levels, noting that 15,250 on NASDAQ is both a psychological number and previous day's high. At 9:30, the market opens. For 28 minutes, nothing, just noise. Then, at 9:58, it begins. NQ starts climbing toward 5,250. Volume increases. The chat rooms light up with breakout calls. Kane watches ES. It's lagging, struggling to follow. SMT divergence is forming. At 10 skew sharp, NQ pierces 15,150, sweeping the psychological level. But instead of accelerating, it wicks. A massive rejection candle forms. The power of 3 manipulation is complete. Kane doesn't hesitate. He enters short, but not recklessly. First position, 2 contracts. The market confirms, dropping 20 points. He adds 3 more, another confirmation, another addition. By the time his full position is built, he's holding 10 contracts, the largest position of his career. And then it happens. What Kane calls the waterfall. Price doesn't just fall, it collapses. Every support level breaks. Every bounce fails. The market is in full distribution mode, delivering the third act of the power of 3. His screen flashes green with profits most traders only dream of. 10 points, 50 points, 100 points. By the time he exits at his predetermined target, the 50% retracement of the daily range, the profit is staggering, over $1 million on a single trade. But here's what reveals Kane's true character: his reaction. No celebration, no screenshots, no bragging. Instead, he immediately reduces his risk for the next week. Why? Because he knows the danger hidden inside success. Complacency. The same poison that nearly destroyed him in crypto. One massive win can make you feel invincible, and invincibility in trading is a death sentence. The very next day, he took a loss, a normal, controlled loss within his risk parameters, and he was grateful for it. Why? Because it reminded him he wasn't a god. The market gives, the market takes. The $1 million trade was just one data point in a career built on thousands of trades. It wasn't luck that created that moment. It was preparation meeting opportunity. Here's something Kane said about that trade that stuck with me. Everyone sees the $1 million. Nobody sees the 1,000 hours of backtesting, the 100 losing trades I took to learn, the 10 blown accounts before I found discipline. That trade wasn't made in December. It was made in every moment I chose process over profit for years before. Here's the wisdom bomb. Legendary trades are not born from chasing glory. They are born from repetition, discipline, and patience, until one day the stars align and the market hands you a gift. But if you haven't survived long enough, you'll never be there to take it. The big money, as Livermore said, comes from the waiting. For Kane, that legendary trade was proof his process worked. But markets don't just test you in moments of glory, they test you even harder in the valleys. And that's where part 3 begins, with the psychology that separates survivors from casualties. Part 3, the mind. Chapter 7, conquering 4 fears. Every trader knows the feeling, the knot in your stomach as you hover over the buy button, the cold sweat when a trade goes against you, the rush of hope when price inches toward your target. Beneath all the strategies, all the charts, trading boils down to a battle with fear. Kane calls them the 4 primal fears. Fear of being wrong, fear of losing money, fear of missing out, and fear of leaving money on the table. Unless you conquer these, the market will conquer you. First, the fear of being wrong. It's not just about money, it's about ego. Every red candle feels like a personal insult. Every stopped-out trade feels like the market is laughing at you. Kane knows this fear intimately. Early in his journey, he held losing trades for hours, sometimes days, just to avoid admitting he was wrong. The result? Small losses became account killers. Now, he treats being wrong as a business expense. A stop loss is not failure, it's insurance. He once said, "I'd rather be wrong quickly than right eventually." That shift turned fear into freedom. Second, the fear of losing money. This is primal. Money represents survival, security, freedom. Losing it feels like death. But Kane reframed loss as education. Every dollar lost wasn't stolen. It was invested in experience. Think of it like this. A doctor pays hundreds of thousands for medical school before earning a cent. Trading is no different. His $130K to $1.4 million month didn't happen despite his losses. It happened because of them. Each loss taught him what not to do, narrowing his focus until only profitable behaviors remained. Third, fear of missing out. FOMO, the market's greatest torture device. You see price running without you, and suddenly patience feels like punishment. But Kane built immunity to this poison. He knows the market is eternal. It was here before he was born. It'll be here after he's gone. Miss one move? Another comes tomorrow. Chase FOMO trades, and you're chasing ghosts. You'll exhaust yourself grabbing at shadows while real opportunities pass unseen. Finally, the fear of leaving money on the table. You close a trade at target, price keeps running, and suddenly your win tastes like defeat. Kane laughs at this one. To him, discipline means taking what you planned and walking away grateful. The market owes you nothing beyond your plan. Break discipline to squeeze extra points, and you've already lost, even if the screen shows green. Here's a story that captures all four fears at once. Kane once entered a perfect short on ENQ, textbook setup, but immediately price spiked 20 points against him. Fear of being wrong screamed cover now. But his stop wasn't hit, so he held. Price reversed, went his way, hit his target. He exited with profit. 5 minutes later, the market crashed another 100 points. Fear of leaving money whispered, "You could have had it all." But Kane just smiled. He followed his plan. That's all that mattered. Let's get vulnerable for a moment. Which fear owns you? Really think about it. Is it the sting of being wrong that makes you hold losers too long? The terror of loss that makes you cut winners too early? The FOMO that makes you chase every move? Or the greed that makes you break your rules for just a few more points? Comment below with just the number 1 for wrong, 2 for loss, 3 for FOMO, 4 for leaving money. No judgment. Recognition is the first step to freedom. Here's the wisdom bomb. These fears will never vanish. They are hardwired into human DNA. The goal isn't to eliminate them, it's to acknowledge them, then act despite them. Kane does this through rules so clear, so practiced, that they override emotion. He doesn't fight fear with willpower, he bypasses it with process. But conquering fear is only half the battle. The other half is maintaining the discipline to execute your edge day after day, especially when the market tests your patience. And that brings us to the monk-like mindset that turned Kane from an emotional trader into an execution machine. Imagine sitting in front of your charts for 6 hours and not taking a single trade. For most traders, that sounds like torture. The itch to click, the urge to act, the need to feel productive, it's overwhelming. But for Kane, that silence is his sanctuary. He treats the market like a meditation, and himself like a monk. His discipline is not about forcing control through willpower. It's about building a mindset so calm, so centered, that inaction becomes as natural as breathing. Kane often says that trading is not about doing more, it's about doing less, better. When others feel adrenaline spike, he slows his breathing. When others are hypnotized by every tick, he zooms out to structure. When others manufacture trades from boredom, he waits for his exact model. And if it doesn't appear, he doesn't trade, period. To outsiders, it looks boring, but boredom is the price of consistency. Picture him in his trading room, screens lit, coffee steaming, alerts set. The clock hits 10 a.m., prime volatility time. Price surges above the morning high. Twitter explodes with breakout calls. Thousands of traders dive in. Kane just sits there, hands folded, breathing steady. He watches for divergence, nothing. He checks the psychological levels, not aligned. He waits for the power of 3, incomplete. Hours pass. His perfect setup never appears. Most traders would feel frustrated, even angry. I wasted a whole day. But Kane, he closes the platform, takes a walk, and calls the day a success. Because success is honoring your rules, not forcing the market to pay you. Here's what most people don't understand. Kane's no trade days are just as valuable as his winning days. Why? Because every day he doesn't lose is a day his capital compounds through preservation. He calls it protecting your powder. Fire all your bullets at shadows, and when the real target appears, you'll have nothing left but regret. I remember Kane telling a story about a student who complained, "I haven't traded in 3 days. I'm wasting time." Kane replied, "You know what's a waste? Giving back 3 months of profits in 3 minutes because you were bored. The market doesn't care about your schedule. It pays those who wait, not those who want." Here's a simple exercise that will transform your trading. For 1 week, only take trades that match every single rule in your system, not most rules, all rules. If even one condition is missing, don't trade. Yes, you'll trade less. Yes, you'll feel unproductive. But by week's end, you'll discover something profound. Your win rate improves, your stress decreases, and, ironically, you often make more money doing less. The wisdom bomb. Discipline isn't about controlling the market. It's about controlling yourself. The market will do what it wants regardless of your desires. But you always have a choice. Trade or don't trade. Follow rules or break them. Be patient or be impulsive. Kane chose patience so consistently that it became his identity. The monk trader. The man who could sit through chaos without flinching. But even monks face trials. Even the most disciplined traders encounter periods where nothing works, where every trade fails, where confidence crumbles. These are the drawdowns, the valleys of despair that break most traders. But not Kane, because he learned to dance with the darkness. Chapter 9. Drawdown Survival. Every trader dreams of the winning streak, but few prepare for its evil twin, the drawdown. The losing streak, the soul-crushing period when the market seems personally committed to your destruction. Kane knows these valleys intimately, and he knows that survival isn't about avoiding drawdowns. They're inevitable. It's about managing them so they bend you without breaking you. Drawdowns are like storms at sea. You can't stop them. You can only prepare for them. Kane built a framework for these dark periods, rules that protect both capital and sanity. First rule, preset limits. If he takes 6 losing trades in a row, he doesn't double down in desperation. He cuts size by 50%. If the streak continues, he stops entirely. Not forever, just long enough to reset mentally. Because the danger isn't the losses themselves, it's the tilt that follows. The revenge trading, the desperate need to make it back right now. That desperation has killed more accounts than bad strategies ever will. Picture this scenario. It's Thursday afternoon. Kane has taken 5 trades this week, 4 losses, 1 scratch. His account is down 3%. The old Kane, the crypto Kane, would have raged. He would have doubled position size, hunting for the one trade to erase the red. But the disciplined Kane does the opposite. He acknowledges the market is out of sync with his edge. Maybe it's news-driven. Maybe it's transitioning between accumulation and distribution. Doesn't matter. His job isn't to force profits from a stubborn market. His job is to survive until conditions align again. Here's something most traders never discuss: the emotional hangover of a losing streak. It's not just the money. It's the self-doubt that creeps in like fog. Maybe I don't have an edge. Maybe I got lucky before. Maybe I should quit. Kane has a ritual for these moments. He pulls up his trading journal from the previous winning streak, not to feed his ego, but to remind himself that edges are cyclical. They work, then they don't, then they work again. The market rotates. His job is to endure the rotation. Kane tells a story about his worst drawdown ever. 15 losses in a row. Not big losses, all within risk parameters, but 15 reds in sequence. By loss 10, he was questioning everything. By loss 15, he was convinced he'd lost his edge forever. But he stuck to his rules. Reduced size, took a 3-day break, came back fresh. The 16th trade, winner. 17th, winner. Within 2 weeks, he'd recovered everything and more. The lesson? Drawdowns feel permanent when you're in them, but they're just weather. They always pass. Here's a mental trick Kane uses. He pre-plans his drawdown response before it happens. When account is up, when confidence is high, he writes himself a letter. Future Kane, if you're reading this, you're in a drawdown. This is normal. Your edge still works. Reduce size to X. Take breaks after Y losses. Trust the process. This too shall pass. Then, when darkness comes, he reads his own words. It's like getting advice from a trusted friend who isn't clouded by current emotions. The wisdom bomb. Drawdowns don't measure your skill as a trader. They measure your character. Anyone can trade well when winning. But trading well while losing, that's the mark of a professional. It's not about avoiding the storm. It's about having strong enough foundations to weather it. Think about this question and answer honestly. What's your drawdown plan? Not your hoping it won't happen plan, but your actual written specific plan for when you lose 5, 10, 15 trades in a row. If you don't have one, you're not prepared for trading reality. Share your drawdown rules in the comments, or simply write, "I need a plan," if you realize you don't have one. For Kane, mastering drawdowns wasn't just about preserving capital. It was about building unshakable confidence, the kind that comes from knowing you can survive the worst the market can throw at you. And that confidence became the foundation of something bigger, a mission to teach others not just to trade, but to master themselves. Part 4, The System. Chapter 10, The Lab Philosophy. What do most traders want when they fail? Another indicator, another signal service, another guru promising the Holy Grail. Kane despises this dependency. He believes signals are crutches that keep you weak forever. That's why he built the lab, not as a signal group, but as a dojo. A place where traders come not to copy trades, but to forge themselves into masters of their own destiny. The lab is not what you'd expect from a $1 million traders community. There are no Lamborghini screenshots, no profit porn, no hype. Instead, there are rules, repetition, and radical honesty. Kane streams his live trading, showing everything: the wins, the losses, the scratches, and most importantly, the long stretches of nothing. Students watch him sit through hours of boredom, waiting for his edge. Why? Because this is trading truth. Success isn't built on constant action. It's built on disciplined inaction. Picture a typical lab session. Screens shared, dozens of traders watching. Kane is calm, almost meditative. "We're looking for SMT divergence at the 15,500 level," he says. Minutes pass. Silence. New members get restless, typing in, "Chat. Why aren't we trading? Price is moving. Let's go." But Kane doesn't budge. 30 minutes, 45. Then it happens. NQ sweeps 15,500 while ES lags. A wick forms. Kane enters. Within minutes, the trade pays. But here's what he emphasizes: the profit is just a byproduct. The real lesson is the discipline to wait 45 minutes for 5 minutes of action. But the lab goes deeper than just watching. Every member must backtest the strategies themselves. Not 10 trades, not 50, hundreds, thousands if necessary. They journal every setup, every emotion, every mistake. Because Kane knows something most educators won't admit. You can't teach someone to trade. You can only show them the path. They must walk it themselves. Here's the controversial part. Kane actively discourages dependency. If a student asks, "Should I take this trade?" Kane responds, "What does your backtest tell you?" If they persist, wanting his opinion, he reminds them, "I won't be there at 3 a.m. when you're alone with the charts. You need your own conviction, not mine." Some students leave, frustrated by the lack of hand-holding. But those who stay, they become traders, not followers. The lab has a saying: "We don't build accounts, we build traders." Because accounts can blow, strategies can fail, markets can change. But if you've built yourself into a disciplined, adaptable trader, you'll survive anything. Kane often shares his own journey as proof, from tech sales to crypto gambler to futures master. The thread through it all wasn't a perfect strategy. It was the commitment to keep learning, keep adapting, keep improving. One lab member said something that captures the essence. "Other groups taught me when to buy and sell. The lab taught me when not to trade. That made all the difference." This is the paradox of trading education. The best teachers don't give you more reasons to trade. They give you the strength to sit still when everyone else is thrashing around in the noise. The lab's approach to backtesting is particularly unique. Kane doesn't just want members to test strategies, he wants them to test themselves. How do you react to 5 losses in a row in simulation? What happens to your discipline after a huge win? Can you follow rules when nobody's watching? These questions matter more than any indicator setting or chart pattern. Kane built the lab as the community he wished existed when he was struggling alone. A place where truth beats hype, where process beats profit porn, where becoming a trader matters more than making a trade. But underneath this philosophy is a harsh reality Kane doesn't hide: the relationship with prop firms, the very vehicles that made him famous. Chapter 11, Prop Firm Reality. Prop firms are the siren song of modern trading. Trade our capital, keep 90% of profits, no risk to your own money. It sounds like the answer to every struggling trader's prayer. Kane knows better. He holds the record for the largest prop firm payout in history, $2.3 million from Apex. But when he tells that story, it comes with warnings, not worship. Here's the truth most people don't want to hear. Prop firms are businesses, not charities. They profit from challenge fees, reset fees, and the mathematical certainty that most traders will fail. For every Kane who withdraws millions, there are thousands who pay monthly fees forever, trapped in an endless cycle of challenges and resets. The firms know this. They count on it. It's their business model. Kane's relationship with prop firms is complicated. Yes, they made him wealthy, but they also nearly trapped him in the comfortable mediocrity. After passing his first challenge, he felt invincible, free money to trade with. But that attitude led to sloppy habits. Why respect risk when you can just reset? Why build real discipline when there's always another challenge? He watched talented traders become challenge addicts, passing dozens of evaluations, but never withdrawing a dollar. Here's a shocking story. A trader Kane knew passed 23 prop firm challenges. 23. His social media was full of certificates, congratulations, humble brags about his funded accounts. But when Kane asked how much he'd actually withdrawn, the answer was devastating. -$8,000. He'd spent more on challenge fees than he'd ever withdrawn in profits. He was a professional challenge passer, not a professional trader. So, why did Kane succeed where others failed? Because he used prop firms as tools, not crutches. He already had discipline from his futures journey. He already had an edge from thousands of hours of backtesting. He didn't need prop firms to make him a trader. He used them to scale what he'd already built. That's the key difference. Prop firms can amplify success, but they can't create it from nothing. After his record payout, something interesting happened. Apex froze his accounts. Too successful, too fast, too much liability. Other firms started watching him, implementing rules to prevent another Kane. This revealed the ultimate truth. Prop firms want profitable traders, but not too profitable. They want success stories for marketing, but not success that threatens their business model. Kane's advice about prop firms is nuanced. For beginners, stay away. Build your edge first. Trade a small personal account until you have consistent profits for at least 6 months. For intermediate traders, use them carefully, 1 or 2 accounts maximum. Treat them as scaling tools, not primary income. For advanced traders, use them temporarily while building your own capital. The goal must always be independence. Here's an exercise Kane recommends. Calculate how much you've spent on prop firm fees versus how much you've withdrawn. Include challenge fees, reset fees, monthly fees, everything. If the number is negative, you're not trading, you're gambling with extra steps. That harsh reality check has saved many lab members from the prop firm trap. Time for honest reflection. If you're using prop firms, are they serving you or are you serving them? Are you building toward independence or just renting success month by month? There's no judgment here, only awareness. Comment building if you're using them strategically, or trapped if you realize you're in the cycle. The ultimate wisdom: prop firms are like training wheels. Useful when learning to ride, but if you never take them off, you'll never know true freedom. Kane's millions from Apex weren't the destination. They were fuel for the real goal: complete trading independence. And that independence starts with the final lesson, the philosophy that ties everything together. Chapter 12, Final Lessons. In the end, Kane's story is not about the $2.3 million payout. It's not about the perfect trade or the proprietary edge. It's about transformation. From gambling addict to disciplined trader. From ego-driven to process-driven. From seeking millions to seeking mastery. The money was just a byproduct of becoming someone who deserved it. Lesson 1. Commitment. Trading is not a side project you squeeze between Netflix episodes. It's a profession that demands the same dedication as medicine or law. Kane spent 4 hours every night for 2 years, just backtesting. Weekends were for journaling and review. Vacations included market study. This isn't about work-life balance. It's about acknowledging that excellence requires sacrifice. The question is, are you willing to pay the price? Lesson 2. Strategy is personal. Kane's edge works for Kane because it matches his psychology. Patient, methodical, risk-averse. Your edge must match your nature. If you're aggressive, build an aggressive system. If you're conservative, build a conservative system. Stop trying to trade like someone else. Start trading like the best version of yourself. Lesson 3. Risk management is everything. You can be wrong 6 times out of 10 and still be profitable if your risk management is correct. But you can be right 9 times out of 10 and still blow your account if your risk management is flawed. Kane never risks more than he can emotionally afford to lose. Not financially afford, emotionally afford. There's a difference, and it matters. Lesson 4. Psychology is the real edge. Everyone has access to the same charts, same indicators, same information. What separates winners from losers is what happens between your ears. Can you sit through boredom? Can you accept losses? Can you take profits without greed? Can you stay disciplined when nobody's watching? Lesson 5. Consistency compounds. Kane didn't make millions from one amazing month. He made millions from hundreds of ordinary months stacked together. Small wins, protected capital, repeated process. The market doesn't reward brilliance. It rewards consistency. Be boring, be repetitive, be mechanical. Let exciting be for spectators. You're here to work. Lesson 6. Never stop learning. Markets evolve. Strategies decay. What works today might fail tomorrow. Kane still studies every day, still journals every trade, still questions every assumption. The moment you think you figured it all out is the moment the market begins planning your humiliation. Stay humble. Stay curious. Stay adaptive. Here's something Kane said that changed how his students see trading. The market is not your enemy. It's your teacher. Every loss is a lesson. Every win is a test. The question is not whether you'll make money today. The question is whether you'll still be here in 5 years, wiser, calmer, freer than you are right now. The truth bomb. Money is just a side effect. The real reward of trading is who you become in the process. You start as someone controlled by fear and greed. If you survive, you emerge as someone who has mastered both. You begin desperate for profits. If you endure, you find yourself pursuing excellence. The charts aren't just charts. They're mirrors reflecting your inner world. And if you're brave enough to look, really look, they'll show you exactly what needs to change. Kane often tells his students, I can teach you my exact strategy, give you my exact rules, share my exact setups. But unless you do the inner work, unless you conquer your own demons, unless you build your own discipline, you'll still fail. Because trading success isn't about what you know. It's about who you are. The market is the ultimate judge. It doesn't care about your degree, your background, your excuses. It only cares about your discipline, your patience, your ability to follow rules when every cell in your body screams to break them. Master that, and the money follows. Fail that, and no strategy can save you. You've just walked through Kane's entire journey, from losing 78% in the FTX collapse to holding the largest prop firm payout in history, from emotional gambling to monk-like discipline, from seeking quick profits to building lasting mastery. 12 chapters of brutal honesty about what it really takes to succeed in the markets. But knowledge without action is worthless. So here's your challenge, your first step on the path Kane walked. For the next 5 trading days, do this. Take only 1 trade per day maximum, just 1. And only if it meets every single rule in your system. If no perfect setup appears, take no trades. 0. Track how this feels. Track your results. Track your emotions. Why this challenge? Because it forces you to confront your real enemy, yourself, your impatience, your FOMO, your need for action, your addiction to the screens. If you can't do this for 5 days, you're not ready for trading. You're still gambling, just with better vocabulary. Now, I need you to make a commitment. In the comments below, type these 4 words. I choose process over profit. That's it. 4 words that will reshape your trading forever. And if you know someone who needs to hear Kane's story, someone struggling with blown accounts and broken dreams, share this with them. Sometimes one story, one perspective, one moment of truth is all it takes to change everything. If you're ready to continue this journey, to hear more stories of traders who transformed failure into fortune, subscribe to Trading Psychology Stick. This is not about entertainment. This is about building a community of traders who choose discipline over drama, process over profit, mastery over money. Remember Kane's most important lesson. The market doesn't owe you anything. Not profits, not fairness, not success. But if you show up with discipline, if you respect the game, if you master yourself before trying to master the charts, the market will reward you with something worth more than money. It will reward you with the knowledge that you can survive anything, adapt to anything, overcome anything. The path is clear. The tools are in your hands. The only question left is this: will you walk the path, or will you keep searching for shortcuts that don't exist? Your trading life changes today, not because of what you learned, but because of what you'll do with what you learned. Kane turned disaster into millions by choosing discipline over desperation, by choosing patience over panic, by choosing process over profit. Now it's your turn. The market is